Hello, 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 and good morning. It is me, your host of the party, Kenny Polcari. And yes, I'm back here in my office in Boca Raton. I'm no longer at the Grand Ole Opry in Nashville, Tennessee, but I have to say, I did spend a really wonderful 3 days there. If you've never been to the Grand Ole Opry, you are in for a massive surprise, because I had never been, and I was just so surprised at what I saw. In any event, the weather was absolutely spectacular, and coming home last night, I went from Nashville to Atlanta to Palm Beach, and I got to tell you something. Airports are teeming with people. In fact, I flew Delta Airlines in at both Nashville and Atlanta. They were asking people to give up their seats because flights are overbooked, because people are just all over the place, traveling, going to see family, going to see friends, and just getting out of the house. So this whole idea that, the COVID and the Delta variant, are causing people to sit tight and not do anything, I think is baloney, because travel is crazy. The destruction, the story about demand destruction for oil, I think is baloney. So after what I saw yesterday, and after what I see every day, just living down here in Florida, people living out, traveling, doing stuff, you gotta buy oil. But that's a whole nother conversation. So we'll get into that in a little bit. So what happened, right? Today is Friday, August 6th. It is non-farm payrolls day. And estimates span the globe. Stocks rallied yesterday and Goldman ups the ante. Oil also rallied back a bit. Building tensions in the Mideast are being credited for the latest move. And JP Morgan is now offering crypto funds for their best clients, all right? And for dinner, we're going to have the pasta allo scarpariello. It's a recipe that comes directly from Milan, but we'll get to that. So yesterday, Thursday, stocks rallied hard, right after taking it on the chin on Wednesday. Banks, energy, travel, consumer discretionary, communications, retail, and even utilities all surged by better than 1%. Tech, while higher, seems to be tiring a bit, up only 0.5%, while healthcare and basic materials ended the day in negative territory. Now look, the day began yesterday with Goldman Sachs' chief equity strategist, Davey Costin, I'm sure you know who he is, announcing that Goldman has raised their year-end 2021 S&P target to 4,700. Joining Oppenheimer, who changed their target earlier in the week. And they also raised their year-end 2022 target to 4,900. So you see they're looking for a 26% gain on the S&P this year, and they're looking for 4% gain next year. In addition, the economic data was better than expected, and initial jobless claims, while they remained at 350, continuing claims made a dramatic move, piercing the $3 million mark, ending at 2.95 million continuing claims. And that's a big positive, right? I haven't seen continuing claims this low since I don't know when. Toss in the better than expected earnings from some of the disruptor names like Etsy and Roku and Lyft and Uber. And once again, you have a recipe for higher prices. And higher they went. By the end of the day, the Dow had gained 270 points. The S&P was up 27. The NASDAQ was up another 115 points. The Russell gained 37. And the transports, which have gotten beaten up recently, gained 180 points, or 1.25%. Causes of all the recent angst yesterday took the day off, right? There was no Delta variant talk, no possible economic slowdown, no supposed demand destruction in the oil patch, no inflation concerns, no uncertain Fed policy, no China crackdown. All those issues took the day off. None of it was much of a concern as the focus turned to anything positive. And yesterday, that was the better eco data once again, the better earnings data, and the better year-end target from our friends at Goldman. And the idea that Jay Powell is not going to announce anything at Jackson Hole that resembles tapering or interest rate hikes at all. And that boondoggle takes place August 26th to the 28th. Now look, according to Goldman, there's nothing to see here. Don't be ridiculous. Just move on. You see, you could make the argument that if the Delta variant or the Fed move was really a concern for the economy and the markets, Goldman would not be upgrading their year-end target by an additional 7%. My sense is that Davey, and by then default Goldman, has a direct line to the Fed, the Treasury, the White House, the Pentagon, the Capitol, the Senate, which is what makes me think that they, just like BlackRock, JP Morgan, Citibank, Morgan Stanley, Bank of America, Wells Fargo, etc., know something that the rest of us don't know. So you see, it's all good. Nothing to worry about. Okay? Which is exactly why you need to stay awake and don't fall asleep. Because first, I don't trust Goldman. Although I trust JP Morgan, I love Jamie Dimon. But Goldman Sachs talks out of both ends, right? So I'm going with my gut. They say one thing, they do something completely different. So I'm still in the camp that the Fed is going to announce the beginning of a taper by the year end at the earliest, which then sets us up for interest rate increases probably by the third quarter, early fourth quarter of 2022. And that's why I think the market's a bit confused. I mean, look, think how many people, I think there are too many people in the other camp, right? There's no taper, no rate increases, and dare I say, I think that's short-sighted, right? Because just think about how many Fed members have come out and indicated that they think it's time that we move on. I mean, Ricky Clarida, who's the vice chair of the Fed, said it on Wednesday. San Francisco's Mary Daly said it 2 weeks ago. And they're just two of the latest to float that balloon, right? Toss in St. Louis Jimmy Bullard, Chicago's Chucky Evans, and Boston's Eric Rosengren, and you have half the committee playing for the other team. So what do you say? You got to say caveat emptor, right? Or buyer beware. I'm just saying. Now, I'm not saying to create panic. I'm just saying buyer beware. This morning, U.S. futures are churning in place, right? Not doing much. Dow futures are off 13. S&Ps are plus 2. The Nasdaq's down 18 while the Russell's flat. So they're just waiting for this non-farm payrolls number, right? And today is all about that number. And by now you know, and I said it, that the expectation consensus is like 875,000 new jobs have been created. And that's been the estimate for a while. So the street is well aware of that. But recently, the gamut has run from plus 350 to 1.15 million new jobs created. In fact, there's some bank in Zurich that estimates we're going to create 1.6 million new jobs. So I just want some of whatever that guy is smoking. Once again, our friends at Goldman had this to say yesterday afternoon. And this is a quote. We estimate non-farm payrolls rose to 1.15 million in July, above consensus target of 870,000. Labor supply constraints eased due to the wind down of federal unemployment top-ups in some states and the addition of over 2 million youth job seekers in June and July. Okay, youth job seekers, these are by definition summer jobs, part-time, not long-term. Jobs that will disappear in September when school starts again. No? I mean, come on, think about it. So it's going to be interesting to see what this number is, right? In any event, the clock is ticking down to 8:30, so strap in. Now, look, today the NFP report is going to be today's market driver. And yes, of course, the better than expected dozen or so earnings reports we're going to get. But if the NFP should somehow disappoint, then expect that they're going to pull all the negatives off the back burner and bring them right to the front burner, and all the positives get pushed to the back burner. I would also be remiss if I didn't at least mention the ongoing drama in Robinhood, right? The news that some of the insiders want out after the explosive surge that gave that stock a $70 billion valuation only 6 days after the Goldman-led IPO, when they valued it at $30 billion. These insiders, aren't stupid. How do you think they got to be insiders, right? They recognize when something's out of line. So once they saw this lunacy, they're all happy to exit. Because you don't really look a gift horse in the mouth, right? They're screaming at you. They want to take this stock. All right, great. Here, take my stock. This news, like I said yesterday, is going to bring an additional 97 million shares to the market, and that sent the Reddit boys scrambling as the stock tumbled by 28%. This after the 60% rise on Wednesday. Right now, this morning, the stock is quoted up small, maybe 2%. It's trading 52.50, 52.60. And oil, which got assaulted on Wednesday, falling some 3% to test as low as 67.50 a barrel, rose nicely yesterday, closing out the day at 69.10 or up 1.4%. Right? The decline on Wednesday was blamed on the Delta virus, which we talked about, while yesterday's rise was credited to building tensions in the Mideast region. You see, someone struck a tanker in the Gulf of Oman, and Israel is blaming Iran. Iran quickly denied it. And then Israel struck some Lebanese military rocket launch sites that had fired 2 rockets into Israeli territory. Once again, the thought is that Iran is behind this attack as well. So when asked, when the Israeli defense minister was asked if he was prepared to strike back at Iran, his answer was an emphatic yes. Okay, so here we go. And just an observation, I told you this, I flew back to Florida from Nashville last night. The airports are just filled with people, bustling with travelers, right? And I told you, they asked me to give up my flight, give up my seat because they were overbooked. So if you ask me, there is no demand destruction in the oil patch. Planes, like ships, don't operate on solar power or battery packs. No do trains, trucks, and most automobiles. And I fully expect oil to regroup and settle in at the $75 to $80 barrel, right? So cut the baloney. Demand destruction, not happening. Wake up. And remember, our friends at Goldman still have an $80 target by September to $100 by year end. And you know, they're kind of connected, right? So I guess you have to give them a little bit of credit, although it kills me to do that. The 10-year Treasury yield is now at 1.23%, up from 1.13% earlier this week. This morning it's yielding 1.25% as we await the result of the NFP report. The VIX fell a bit yesterday, and this morning is down another 12 cents, breaching its long-term trendline support, suggesting that everybody remains complacent. And gold is confirming that mood as well, falling more than $10 to end the day at $17.99. Also below all three of its trendline supports, suggesting that we could see gold tested June lows of $17.65 an ounce. Bitcoin's trading at 40,000, just above. Ethereum's trading at 2750. Neither seem phased at all with the recent SEC comments about more regulation, and that's a positive. In addition, we learned that JP Morgan is very quietly launching access for their high net worth and ultra high net worth clients to 6 different crypto funds offered by Grayscale, Osprey Funds, and a new name on the block, NYDIG, NYDIG. This only adds to the building legitimacy of the asset class and is being viewed as a huge vote of confidence. While Jamie remains a bit skeptical, the fact is that clients have demanded access, so he is listening. And I already said that to you. So pay attention to what happens out of Bitcoin after this news kind of permeates and gets digested. The S&P closed at 44.29, once again testing the most recent highs. In fact, it made another new high. Wondering what to do next. Recall that I drew a trend line earlier this week that targeted like 44.55 as the next interpreted level of resistance, since we don't really have any hard data because we're in uncharted territory. There is nothing above us, right? So everyone is flying by the seat of their pants. Any disappointment today is going to see the market back up, but there appears to be plenty of support down 1 or 2%. So I'm not worried about that. And any upside surprise could see us test 45.55 in a heartbeat. In any event, stick to the plan. You know that, right? Remember, investing is dynamic. Keep some cash on the sidelines ready to deploy in the event that there's opportunities are created. And you can always tweak your portfolio if it becomes out of balance. You can text the word invest to 21,000 to get my digital business card. Feel free to download it right to your phone. Send me a text, send me an email, give me a call. I'm always happy to discuss the markets. I'm happy to discuss the plan. I'm happy to discuss any concerns you have. You know, you can also find me on Twitter. My Twitter handle is just my name, Kenny Polcari. You can find me on Instagram at KennyP1961. And if you're watching this, you know you can find me on my YouTube channel, which is also Kenny Polcari. So spread the word and start subscribing. Anyway, what's for dinner tonight? Oh my God, we got this great dish called pasta allo scarpariello. This recipe comes directly from a friend of mine whose name is Claudio. He lives in Meda, Provincia di Monza, which is outside of Milan, right? He's a member of the Morning Thoughts Club, and he loves to cook. Surprise! He's Italian, right? I've enjoyed my friendship with him because he speaks to me in English, and I get to respond to him in Italian. So that works out great. Now, while Claudio and his family live outside of Milan, this recipe is traditionally Neapolitan, and he was taught how to make it by his Neapolitan wife. So I hope you enjoy it as much as I did, because it's not only simple to make, but it is really, really delicious. So salute. All right, so for this, you need a pound of spaghetti. You need 2 of those containers of those sunburst cherry tomatoes, right? You need fresh grated Parmigiano cheese. You need some basil. You need 1/2 of 1 chili pepper, seeded and cut into strips. You need a garlic clove, a nice big garlic clove. You need salt and pepper. You need olive oil, right? You want to do like you always do. You want to set a pot of salted water on the back burner, bring it to a rolling boil, put the cover on it, leave it there until you're ready. Now, you want to rinse the tomatoes, so rinse the tomatoes in a big bowl, fill it with cold water, rinse them off, and then strain them and set them aside, right? In a large saute pan, one that's going to be able to accommodate the pasta, you're going to add the olive oil, go around 2 or 3 times, and then you're going to take the sliced chili peppers and you're going to put it in the olive oil with the whole clove of garlic. Don't chop it. Put the whole clove in, saute for 3 to 5 minutes. Now you're going to add the sunburst cherry tomatoes and cook on medium-high heat for about 10 minutes. Making sure to stir them right, don't let them burn. Now look, some of the tomatoes will burst, while some will just soften and cook. You want to season it with salt and pepper. And if you really want to, you can take the back of a fork and you can kind of break open some of the tomatoes. But don't break them all open. Leave some of them as whole tomatoes. Now, at this time, you're going to add the pasta to the boiling water. You're going to cook that for about 8 minutes until it's al dente. You know how to test it, right? So start testing it about 6 minutes, 8 minutes, because it'll continue cooking in the saute pan. Now, while the pasta's cooking, you want to take that whole clove of garlic out of the sauce. You want to take a ladle, add 1 ladle full of the pasta water. And then add the rough chopped basil leaves. Put that all in the saute pan, mix it around, and get it ready, right? When the pasta is done, when it's al dente, about 8 minutes or so, using your tongs, don't go and strain it in the colander. Using your tongs, reach in, take the pasta out, drain it a little bit, plop, put it right in the saute pan. Repeat until you get all the pasta in the pan, right? Now look, the pasta might suck up the sauce. So now you're going to feel free to add another ladle or so of the pasta water to the bowl, right? Just to keep it moist. Don't get it watery. Now toss it, remove it from the heat, and now put in 2 handfuls of grated Parmigiana cheese. Mix it well, and because it's all hot, it's going to turn into like a little bit of a creamy sauce. You want to serve this immediately in warm bowls, always having the extra cheese on your plate for your guests. Now look, you can go 2 ways with this. A nice light red, like maybe a Pinot Noir or a Chianti, always goes well. Or you can always go with my favorite white wine, which is the Pinot Grigio Santa Margherita. All right, I'm going to post a picture of this dish on my Twitter handle, so be sure to take a look at it. An event, the sun is coming up, the NFP is only minutes away. Take good care. I'll see you on Monday.